Good morning and welcome everyone to CPA webinar, Rethinking the Sector and the Role of Mergers and Acquisitions. As some of you might already know, my name is Fabiola and I work as an Events and Membership Executive for the CPA. Today, I will be helping to run the webinar our hosts, Peter Keblehorn, CPA's Chief Executive, Midun Padel, BDO's Director of Mergers and Acquisitions, and John Stephan, Head of Global M&A. The event will last 1 hour. We will start with Peter, who will give you a brief update from CPA. Following, John and Midun will do a 20 minutes presentation about building resilience and rethinking business strategy and the role of M&A. An analysis of recent transactions will provide an interesting perspective, and they will share BDO's prediction for the sector. The last 15 minutes will be dedicated to answering your questions, so please feel free to type your queries in the Q&A box. And at the end of the presentation, I will be reading them out. If we run out of time, any leftover questions will be addressed privately afterwards. Before turning the floor over to Peter Keblehorn, I want to remind you all that the webinar will be recorded and the chat will be active only for comments. However, if you wish to ask questions, please use the Q&A box. We hope to post the recording on the CPA website within the next 48 hours. Thank you, and Peter, you can feel free to begin.
Good morning, everyone, and welcome to the next in the series of webinars from the CPA. I want to just cover a few things before I hand over to John and Midun. I think we have an agenda slide coming up. Fabi, do we not? Just pause for a second there.
If you want to share your screen, please. Thank you.
I think there we are. Splendid. So that's lovely. Thank you, guys. So what I'm just going to cover there is a few moments on the Construction Leadership Council, our autumn scenarios, our key priorities into 2021 before I introduce you to BDO. So the first of those items on the Construction Leadership Council, many of you will be aware during the pandemic, we've had the virus task group running. That has been a significant step forward for the industry. So despite the difficult time that we've been working through, that has brought together a lot of representation from across the industry and has actually developed a lot of good guidance and a lot of initiatives and actually a springboard for us to take the industry forward. So I just quickly want to describe the structure that we have now moved into, because of course initially there was a stage where we were looking at the response of the industry to the pandemic to ensure that we had safe working procedures. Many of you will be aware of those and they were published early on and used throughout the industry. We've now got a situation, however, where we are looking at the structure going forward. We've created, as we call it, 4 horizontal groups looking at infrastructure, buildings, housing and RMI. And then several vertical groups of work, and those are focusing on building safety, on exports and trade, on skills, health and safety, business profiles, digitalization, net zero, and business models such as design for manufacture. Those structures will help us to move the industry from the restart phase through the reset phase and on to the renew phase, which was published again in the CLC's work going forward, the roadmap to recovery. Now, it's crucial that we look at how the industry can both support the economy going forward, but it's also crucial that the industry is able to support itself. And in the work that all of those CLC groups are doing, I think we see collaboration and cooperation probably like that we've never seen before in the construction industry. And there are many ways that everybody can help and contribute. A lot of information on the CLC website and on the CPA website. So I'd encourage you all to have a look at those various items and go forward. And of course, we're on the brink of looking at how Brexit transition is going to affect us in the forthcoming months and years, actually. And a lot of work, again, through CLC is being devoted to that. So I think some challenging times ahead, but hopefully with all the energy that's being put into the Leadership Council work, that will surely help us as an industry to go forward. And then moving now on to the autumn scenarios, many of you again will know that the economics team led by Noble Francis within the CPA continuously review and research the economic landscape. We recently published our autumn scenarios, and in those we are trying to identify just what actually is the future for the UK economy, just how are things going to develop going forward. And of course, as we all know, we're moving into a different phase of lockdown tomorrow. That undoubtedly will have an economic impact. Our current analysis headline is that the economy overall will shrink by 14% this year, approximately. And what sort of recovery do we anticipate? We more or less certain now that this is going to be a W-shaped position based upon the varying activity that has come around through the summer and now moving into the autumn. Key areas to look at, of course, is the housing market and how that is going to affect confidence and drive the economy going forward. Challenging times ahead, but we are trying to ensure that our analysis, as we publish it, reflects those issues as they develop. And then, if I may, just before handing over, I just wanted to cover a few of the key priorities that CPA are looking into. Aside of all the work that we're doing with the Construction Leadership Council, we continue to focus, as I've just said, on the economic outlook. And I know that many of our members find that really important as to how they can use that in their various companies. Additionally to that, we are still focused on the building safety programme and the Dame Judith Hackett recommendations. The implications of the Grenfell disaster are considerable, and during this next 6 months, we are likely to see the development of the supporting legislation around the Building Safety Bill and a lot of detailed work regarding quality, duty holders, competence, the ability of the industry to move itself into a different place, to achieve that cultural change that Dame Judith Hackett was talking about, and to deliver some of those key improvements that will mean that the construction industry regains its confidence and regains its perspective that was so sadly lost with the Grenfell tragedy. We also have a lot of work going on with regard to digitalisation, and we will continue to push forward our programs in that area. Key to that is to link that with the building safety program and to make sure that digital delivery becomes business as usual as we go forward into the forthcoming years. And then we are also doing a lot of analysis of what the Brexit transition actually means. Many of you will be aware of the move from the construction products regulations in Europe over to the UK version, the new UK mark, and how all of those elements are underpinned by the various standards and regulations. It's a very complex arena at the moment, but we're hoping to bring clarity to it on an ongoing basis to help everybody make that transition. So that's a lightning tour through some of our work, but I hope that's of interest to everybody. So now it gives me great pleasure to introduce BDO LLP. They have advisory service and accountancy to help businesses navigate through a difficult and changing world, as I've just been alluding to. So it's important to say that they share their clients' ambitions and in an entrepreneurial mindset, if you like, in combining an ability to have global reach and to bring expertise into this interesting financial advice arena. So BDO's products and services group occupy a very special place in the construction products market, and I'm sure John and Methina will talk to you about some of that in a minute. But we are really delighted to have them join us this year as an associate. And so without further ado, I'd like to hand over. I think John's going to lead us off and then bring in Methina in due course. So John, the stage is yours. Over to you. Thank you.
Peter, thank you very much indeed. Good morning, everyone. Delighted to be here. Actually, really delighted to be working with the CPA. It's been an ambition of ours for some time, so that is great. Methina, if we could just go to the next slide, please. So if we just do quick introductions first. So I'm John Stefan. I work in our mergers and acquisitions department. And what that means is I help companies buy and sell businesses. So I advise them on corporate transactions, and I've been doing that for quite a long time, 25 years or more. But in particular, I've done that in the building products sector. So I've been heavily involved. A very large proportion of my work is in the sector, hence the sort of desire to talk to you today.
Good morning, everybody. My name is Mithun Patel. I'm a director in the mergers and acquisitions building products team. Been with BDO for and doing M&A for 12 years, and I have been a corporate development director for Spirax Sarco, which is FTSE 100 PLC. Just moving on.
So if we go to the next slide, just one more on us, and then we'll sort of get into the content of today. So just a sample of our clients across the various subsectors in building products and services, and really they cover owner-managed businesses, they cover private equity and private equity-backed businesses, and they cover large corporates, where we've helped some of the bigger groups in the sector buy and sell businesses.
Thank you, John. So we wanted to just start off by showing a few slides of some indicators of what we monitor in terms of health of the building products market. So the first slide here is the building products share price index that we've collated, rebased to 2009, and as you can see, we've had a decade long of increasing value. The sector has shown resilience throughout the Brexit negotiation period. Clearly, COVID has had a sharp impact, but we are pleased to see a recovery as well, which is looking like a tick shape at the moment. But clearly, we are entering another phase of lockdowns, and clearly we have Brexit on the way as well. So we are cautious for Q4 and Q1 next year, and we understand the CPA's view on recovery there. Just on the next slide is another indicator where we're seeing a return in confidence in the market. The blue line is the analyst estimates for the sector back in January. You can see a huge dip in sort of probably the height of the lockdown in sort of May. And currently we are seeing a return in that sort of confidence levels, although not back to the pre-pandemic era. Another graph that we're going to show you and how we monitor the health. M&A grow, the number of deals in the sector has grown since 2009, as well as multiples as well. The average multiple for the sector is still around about just underneath 7, according to our data. You can see that in this year, in H1, there has been a significant impact in the number of transactions, clearly, because of social distancing. But we are seeing a huge return in activity at the moment. M&A teams across the country in the sector are preparing transactions, have prepared companies for sale, and we are seeing a huge uplift at the moment. So we are quite confident that that there'll be a return in the number of transactions in the next 6 months. John?
Okay, thank you. We'd now just like to talk to you about our own model. So obviously you're familiar with the CLC roadmap, as shares some letters, the letter R. But really, coming into COVID, we were having lots of conversations with clients, and we felt, it'd be quite interesting to put a framework together to help us have some of those discussions, and also to help our clients articulate their own thinking, to their stakeholders in the sort of widest sense. So our model is called the Rethink model, and it's got 3 phases. Over on the left, the sort of sharp red phase was the initial react phase, which we hoped we were sort of largely through. And that, was about immediately protecting businesses, taking advantage of furlough, deferring tax payments, and accessing government-backed loans. I guess to some extent, we're sort of potentially back into that a little bit more with the extension of the furlough scheme. But that sort of moving into the resilience phase, which we sort of felt we had moved into, and that's the green phase in the middle, which is about adjusting businesses to the environment that we're in, and sort of rethinking plans and forecasts. And then sort of moving into next year, hopefully moving into next year, the realise phase in grey there, which is about adapting, to the new normal in terms of whatever that looks like. And again, revising financial plans and trying to do some modelling. So that's our model. We're just going to look a little bit more at resilience and realise. So in terms of resilience, we've sort of got 7 areas that we've divided it up into. The first one being premises, and clearly, everyone has had to, from factories to depots to offices, everyone's had to adjust social distancing, health and safety. And I guess the big question, is what will the future of offices be? What will offices look like? And I mean, if I think of ourselves, we've got just over 20 offices in the UK. They're all leased. One is coming up for renewal fairly soon. And we've decided with that one that we'll take a smaller space. We've got quite a large building in that particular city. We're going to downsize, and we're going to repurpose it. We're going to have a slightly different layout to what we have in our existing offices. And then in terms of employees, I mean, clearly health and safety, but also well-being and mental well-being. I mean, we've had to put a big, with 5,000 people working remotely for an extended period of time, we've had to put a big sort of emphasis on mental well-being. And, a lot of our clients have had the same and talked to us about that. With financial, it's not just debt. I mean, actually, there's a lot of equity out there. There's a lot of private equity that is very much open for business, and they initially said about, they're thinking about their own portfolio companies and their existing investments, but now they're sort of beyond that, and they're very much, looking to invest in businesses in the sector. We're working on a couple of transactions at the moment that involve that. So, there is equity. It's not just debt. Then, I guess there's been a whole lot of new legal and compliance measures to think about, and new guidance, which again, has required some rethinking. But in terms of management and leadership, this is probably, it's been a hugely challenging period. And I guess the way sort of we've thought about it as leaders is to ask ourselves, are we focused on the right things? And in assessing that, we've had 4 measures. The first of which is value, all those things of adding value to our organisation. The second is efficiency. I mean, are we being efficient in the use of our time in this current environment? And thirdly is time. Are we setting aside enough time to think about what we need to do, and to do that rethinking, some slow thinking. It's kind of very easy to get caught up in rushing around, doing lots of things, lots of firefighting, but setting aside a bit of time for that slow thinking, we think is vitally important. And fourthly, criticality. I mean, is it critical to the organisation? And I guess it's very easy to lay new initiatives on top of old ones, and sort of before you know it, you've got initiative overload. And we think that part of rethinking is just trying to simplify things and take away, some of that overload, and focus on the things that are really, really important to adapting business models. Then, the kind of external factors, suppliers and customers, we've clearly seen a lot of change, a lot of disruption in the supply chain, shortages of certain product, plasterboard and the like. We've seen price increases, and that has caused, our clients and people that we're talking to have a think about, rethink about the supply chain. So talking to one client the other day that does engineered timber products, and they've seen big increases in raw material prices in timber. They bring that in half through merchants and half direct from mills, sort of particularly in Sweden. And their kind of rethink is to go direct a lot more. So they'll increase the proportion that they buy direct from the mills, which will have a definite price benefit for them. And then, another client that does smart energy products for the home, and they buy all of they design the products, they have them made in China, they source them all from China. They've decided that they need to have some sourcing from Europe, so they've identified a source in Eastern Europe, and they're going to twin source in effect. Part of the supply chain from China, and now part of the product will come in from Eastern Europe. So quite a lot of changes to supply chains, and often they're quite opaque. And we think a lot more sort of data analytics will come in to try and identify where products are coming from, particularly where there's a lot of complicated components. And then customers, what I guess we've seen, I think we probably all experienced during this lockdown period and beyond, has been a surge in e-commerce, and the sector was lagged behind retail for a long time. And what this has done probably is to accelerate some of that e-commerce adoption, which has been good, particularly when depots were closed. Customers could still buy product online. It does bring some challenges. It kind of increases the transparency of pricing when you compare that with opaque rebate systems, and it enables customers to shop around, and therefore, the sector will have to learn, some of the things that retail has learned around customer loyalty and retention, and that might be service, availability. We've got one builder's merchant who's sort of focused very much on adding value through testing products, testing and certification, and also sort of on-site storage units for consumables. So they've coupled that with their e-commerce offering. So that's resilience. And then moving on to realise, these are some of the themes that Peter touched on at the beginning, and we sort of share that view, and we think, these are the sort of long-term themes that still, are there to be addressed within the sector. This is our take on that. I'll just touch on a few of these. And we think that the organisations that get these right, will really be the winners as we come out of this, and we, come into that sort of new normal. So in terms of sustainability, we think that is just going to be an ongoing sort of focus on greener products, on environmentally friendly products, on environmental, social and governance, ESG. And a couple of examples there. Talking to a client that makes wall coverings, and since the sort of onset of COVID, they were in discussions with their suppliers of paper. They've got away from vinyl, so vinyl is now sort of completely out of their products. They're paper only, and they've taken that one step further by moving away from solvents and adhesives to self-adhesive. So a kind of interesting example of sustainability. We thought also, we're going to see a lot more solar products, solar roof panels in residential. We think that's a trend that will increase. So sustainability is a big one. In terms of technology, we're going to see a lot more data, use of big data. We've got chatting to our Canadian colleagues the other day. They're working with a plant hire business, and they've been helping them with predictive maintenance. So that company does routine maintenance. It does kind of essential maintenance and reactive maintenance. But they've been using data to try and forecast, when they need to change a component in one of the products to avoid a breakdown. So we think data is going to come into it a lot more. Building safety, Peter sort of touched on that at the beginning of the building safety bill. We think that's going to clearly be a big driver. Testing and probably a bit of innovation with sort of new products coming through. So, we definitely think building safety is going to be a big one. And then lastly, I guess the one we pick out is government support. I mean, this, when you think about it, this is a huge chunk of the economy. Employs a lot of people, a big percentage of GDP, and it's one of the levers government have got to spend, to help restore kind of economic fortunes for the country. And some of that, it'll be in policies that we might not all agree with. We might not think the designs are ideal. So the Green Deal or build in terms of the planning process, the kind of sentiment thing we'd all agree with. Maybe some of the execution is not perfect, but it is an indication of government support, and they remain, the biggest single client for the construction industry, and infrastructure in particular. We think is just a big area of focus for the government.
Thanks, John. Where does we think that mergers and acquisitions will be quite a key driver for sort of rethinking the economy. Indeed, we've seen quite a surge in businesses coming to us talking about their acquisition criteria, probably more so than any point in the last sort of 4 or 5 years. These businesses are from the UK and overseas as well, looking to invest in UK building products assets, mostly because they want to accelerate the change that has happened during the pandemic, where people are changing business models to cope with the new normal, but also to access new markets, products, services and technology. And I think we do think that this is going to lead to quite some consolidations, especially when larger groups, better capitalized companies look to really take advantage of the current situation in terms of rethinking, making their business models better, more efficient. And we're seeing a lot of that activity at the moment. Clearly, synergies will be key to a successful acquisition, and synergies will form part of the thesis in order to get that access to new market and services and technology. So it's not just synergies from an operational level, but also from a commercial level as well, where companies are looking to access other areas of the market where historically they haven't been able to access. And that's not just geography either, it's also the types of customers and the size as well. One of the key parts of a rethink is always to think about succession issues, especially those entrepreneurial businesses. We do think that there are, especially in certain areas in the building products market, in certain subsectors, they have been owned by certain entrepreneurs that have been with the business for decades. It's their own baby, and succession is going to be an issue for those type of businesses, especially going through the next period of growth or recession in the marketplace. And those companies M&A will be a key factor in their decision making. Rather than to recruit people into the business, they will be potentially looking to sell. There are new funds for growth. As John mentioned, there is a very active equity market looking to place equity in ambitious businesses, and they want to back business plans that they're able to take advantage of, looking to grow in the new markets, products, and especially technology. We do think that the change in CGT, the potential change in CGT, which is potentially coming in April, will be driving shareholders, owner managed businesses to exit a lot sooner as well. And we are seeing a lot of activity in that based upon that decision. So to get my crystal ball out in terms of M&A predictions, I think John touched on some of these already. We do think that there's going to be a surge in an increase in corporate carve-outs, where large corporates are looking to stick to the knitting a little bit more, and to focus upon the areas of their expertise. Anything related to infrastructure or exposed to infrastructure is going to be highly desirable, especially for the equity market, but also for international corporates that want to come into the UK. Anything tech-enabled, and what we mean by tech-enabled is not just sort of factory automation, e-commerce potentially, but also the the use, the analysis and monetization of data is something that we're seeing a huge increase in that, in investment in that area. And we think that the businesses that are more tech enabled, understand their data better, will be able to achieve a higher multiple, for example, on exit. Clearly, green and sustainability, any businesses that have those credentials will be quite desirable, and we are actively seeing businesses wanting to acquire into that market. Offsite manufacturing, the shift in sort of new modern methods of construction will also be, we think, quite a hotbed of activity in the M&A space, where larger, more traditional businesses will be looking to take advantage of that trend, which is potentially an efficient way of building. The pandemic and the uncertainty of forecasts, we do think that deal structures will involve an element of earnout, i.e. A payment on performance going forward. So that will be one of the key trends going forward. And of course, stressed M&A will increase. We are starting to see that, although I think the latest announcement of furlough will extend some of those decisions as well. Private equity, as John mentioned, do have a focus on their bolt-ons on their current portfolio at the moment, but they are actively very hungry for new deals as well. So I think that was a very short and sharp presentation into our thoughts, and we would welcome any questions, please.
How could a business fund an acquisition, and is funding available in this current climate?
Yeah, we're seeing quite a big drive in the building products market. So funding is available, and especially in the areas of asset-based lending. So those businesses that those lenders who are looking to leverage the debtors and stock and plant and machinery to provide that funding. We do think we have seen quite an increase in the number of deals that use asset-based lending in this market to fund acquisitions. But there is also private equity available, not just from those houses who are looking to take a majority stake, but there are businesses out there that want to take a minority stake and provide potentially a succession solution to those entrepreneurial businesses.
Yeah, I think the other bit is maybe just some changes in structures of transactions. So we'll probably see, or we are seeing, a few more earnout type situations, which basically means that a company pays some of the consideration up front, and then it pays some of the consideration later based on future profits. And that's partly because COVID has had that impact on current profitability. We've seen a dip, and there's a bit of uncertainty around timing of when it comes back, to what extent does it come back, and so on. So part of the funding is actually to sort of pay for it later. So pay some now and then pay a bit more next year or the year after in a structured way. And we're definitely seeing more of that sort of feeding into the sector.
How long would it take to sell a business?
I mean, the sort of quickest you can. I mean, it's 6 to 9 months really. The planning, we always think the planning is critical. So the more planning and preparation that you do up front, to get thoughts together, business plans and codified information, financial information in the right place, legal documentation in the right place. All of that preparation always leads to a smoother and a faster transaction when you sort of move into the market phase. So we tend to spend 2 or 3 months preparing, and then we've sort of usually got another sort of 2 or 3 months of kind of activity in the market, talking to counterparties, and then we've got a period of sort of 1 to 2 months of closing, doing due diligence and closing. So typically 6 to 9 months. It can be faster. The sort of distressed deals can be done quite a bit faster than that, and we have we've experienced deals that have been done in a couple of weeks, but those are special situations rather than good profitable businesses that have just had an impact from the current environment.
Thank you, John. Tony Groom says there isn't much evidence of distress among manufacturers. Is there a calm before the storm, or is everyone genuinely in good shape?
Well, I think the demand, talking to our clients, demand has recovered tremendously well, faster than their expectations, I think. So we saw big dip off in the first lockdown. We saw a very rapid recovery, and that kind of across the board from our discussions. People that make building products, people that distribute them, people that kind of construct and build. And provide services. So pretty well all of them have said to us that we've had a kind of we're back to old levels. In some extent, we're ahead. The big question mark that most of them are saying to us is what happens next. In terms of higher unemployment and some of the negative factors sort of trickling in to demand. To what extent are they going to impact, and what's the timing of that?
Yeah, I mean,
so. People are a bit more cautious about Q4, and Q1 next year, I think, really.
Yeah, I mean, for sure, furlough has had an impact to the RMI market, and it'd be interesting to see what's next, especially in that market. But I think it's if the exposure is to the infrastructure market, we think that's pretty strong, and maybe some short-term pain.
Yeah, I mean, house building, there's still a shortage. We think that will be fairly resilient. It's probably not quite as working practices have changed. It's maybe productivity's down and so on. Infrastructure will be strong, as Mithun says. The sort of market that is going to be more volatile, we think, is commercial. The future of office buildings and so on. That we think is quite a big debate, really.
Peter, would you like to add anything?
Well, I think you probably see me nodding to most of that commentary. Actually, I think it's a challenging time, and certainly I've been running this group through the CLC structure called the Product Availability Group, and we've clearly seen a huge leap in demand through the summer months, particularly for outside materials and products, and many of the supply, shall we say, ripples that have occurred in early days after the initial lockdown have now disappeared. And there was a time when plasterboard and plaster were very, very rare. Now we're back to full supply across the country. But again, as I'd echo what John and Mithun have said, is that everybody is waiting to see how things will stand up, how things will improve over the end of this year going into next year. We've also got the ripples of Brexit to contend with. And so I think that there's a lot of challenges for everybody, and how we actually navigate some of that stuff is going to be really difficult in some areas, I think.
We got another question. What are the key items to think about when planning to sell a business?
I think it's all very specific to individual circumstances in terms of the exact plan. But generally speaking, it's going to be about the management. It's going to be about people. Have you got a management team, for example, to be able to take the business forward post acquisition and to be able to present that management team to bidders? It's going to be about the business plan. What are you going to share with potential interested parties on how the business has performed in the past? And how is that going to perform in the future? And we will need to the data behind that and the evidence behind that will be quite critical to explain the story, as it were. I mean, there are a number of items, but they're probably the key ones, John, I suspect.
Yeah, I think maybe just the other thing is tax. So tax planning. Obviously, the sort of advantages of Entrepreneurs Relief have been greatly diminished. Our tax colleagues are sort of very much of the view that capital gains tax will change, and that rate will go up and sort of move closer to income tax. So again, some thinking around the timing vis-a-vis potential capital gains tax changes. And then, other sort of tax structuring things about, have you got property? Do you want to retain the property, take that out of the company? how do you do that in a tax efficient manner and so on. So there's some structural issues and there's some sort of fiscal issues.
Is BDO seeing any issues related to insurance that may compromise deals?
Insurance? Does that, so there's a thing called warranty and indemnity insurance. I don't know if that's the area that question is referring to, but when someone sells a business, they always have to give representations and warranties. Basically, they're warranting that what they've told the buyer is the right thing. And there is a market. There's an insurance product called W&I, Warranty and Indemnity Insurance, and that's grown in popularity. That's become very, very popular and sort of reasonably commonplace. And that, instead of the buyer pursuing the vendor in the event of claims, they pursue the insurer in the event of claims. So that's one aspect of insurance, but maybe that question was getting at other things as well.
Yeah, John, if I can come in, I suspect that question centres around the problem we've got in the general insurance market over PI insurance, and in particular, this comes off of anything to do with tower blocks or cladding, and right across the spectrum. Certainly, a lot of CPA members who are involved in the cladding arena, lots of consultants. Anybody who's involved in anything that is in any way slightly connected with, shall we say, a Grenfell situation, that whole insurance market has hardened up considerably, and there's a lot of discussions going on at the moment. Certain companies just can't get insurance, or they've had their terms hardened up considerably. And it's causing a huge amount of problems right across the whole construction industry in terms of just trying to get work done. So I suspect that's the key issue there, and whether that spills over into the kind of areas that you guys are involved in, I'd be very interested to know.
So we haven't seen any specific examples of that at the moment, Peter, but we are clearly aware of the issue. I think the insurance. Difficulty of getting insurance clearly will hamper the bidder's ability and confidence levels on doing that acquisition. If it's about cost, then that cost will be factored into the forecast, for example, of the business when you present for sale, and will have an impact, I suspect, on value. If you have a good advisor, and we would say we probably are, there's various ways of dealing with that scenario in certain situations, and through protecting the bidder's risk through the SPA, etc. But for sure, it will have an impact on appetite and value. Although that can be, there is other ways to skin the cat, as it were, to protect the bidder's risk profile.
Yeah, but in a general sense, we haven't seen that much impact. Whether it's to come, I guess, remains to be seen. If that's a sort of more of a current phenomenon. But on the transactions we've worked on in the last 12 months, and even the ones that are on now, we haven't really seen that. So it might be specific to a smaller set of businesses, or it might be yet to come. But I guess it will have, as Mithun says, an impact on value. Maybe in the extreme, an impact on whether a deal can get done or not.
Well, the message I get very clearly, John, is that there are certainly consultants and contractors moving out of parts of the sector because of it. And the latest information I get is it's pretty much an intractable problem, because the insurance industry quite rightly is looking after its own position, but equally, there are large areas across the construction sector who are saying, well, we actually can't practice, or we can't get work done, or we can't actually have insurance to support that work. So we're in a standoff. I suspect that the reason you haven't seen it is it is about the here and now, and it is about specifically anything relating to cladding. But I mean, a spill-off from that, of course, is about people's flats being valued at zero because they might have AMC cladding on the outside. and that's affecting the housing or the flat market considerably, because there are literally hundreds of thousands of people caught up in this position where they can't sell, which is crazy.
Thank you, everyone. I think it's time to wrap up as we went a little bit over time. Thank you again, John, Peter, and Midden for delivering the event, and thank you everyone for taking part to the webinar. We hope you found this information interesting. If you have any further questions or comments, you can email our hosts or myself, and we will be happy to reply. Finally, the recording of the webinar and the PowerPoint will be available in the next 48 hours on the CPA website, where you can also find information about CPA membership. And thank you, everyone, and have a nice rest of the day.
Thank you all.
Thank you. Bye-bye.